All right, good morning, everyone. This is our Monday morning outlook. And what we do here every Monday is we try to, look at the market to determine what the market direction the market is likely to be going for the week, right? That will start from the fundamental side of things, and we'll move to the technical side of things. And we try to see what the market is doing, what's playing out in the market, what trades we can take. And if we find a trade, we'll get on the trade. If we don't find a trade, so we give further updates later on, okay? So first of all, we'll start with the fundamental side. Let's look at what's going on for this week. So there's been a lot that happened last week. Last week we were meant to have FOMC. FOMC didn't hold because the body that releases the NFP data, NFP was meant to release last week, and NFP wasn't released last week because the body that releases the data, the Bureau of Labor Statistics, is part of the government in the US that is basically shut down, that is currently shut down, right? So we didn't get that data. Basically, the market was, it was just speculation, relying on outside data and all of that. But the main data itself, NFP data that we usually get every first Friday, didn't come out, right? So there's currently a US government shutdown, and so that's affecting a lot of fundamental events that were meant to expect to come out from this, coming to the market during the course of the week, right? That is still ongoing for this week. So we might still be seeing a whole lot of data that are not coming out the way they're supposed to, right? And so that puts the market at a certain spot. But for now, you can trade based on, technicals and all. But of course, we're still going to look through the news so we just have an idea because the government of the US can be restated anytime, right? So for someone who's asking what is that about, so the US government has a calendar that starts from October 1st all the way to of 1 year, like October 1st of last year to the September 30th of this year. That's the calendar that the US government runs, right? And before that time elapses, the Congress is meant to come together. The Democrats and Republicans, are meant to come together, and then they are meant to agree on the spending bill for the next fiscal year, right? So, but currently there's a stalemate. There's a disagreement between between the both parties in Congress, right? Democrats and Republicans, and their disagreement is around what to spend on, what to cut spending on, right? So no agreement there. And because there's no agreement there, there is no appropriation for government to spend. There is no money for government to spend. There is no allocation for government to spend, right? So that's basically why the government is currently shut down until that resolution is done. When that resolution is done, then the government comes back. And of course, all these agencies, the Bureau of Labor Statistics, so many agencies, countless, some hundreds of agencies basically that release a lot of data that we rely on as traders are part of the US government. Okay. And so because of that, a lot of them are shut down. And so we can't get data from them for the moment until the resolution is done, the government restarts again, then we start to have all that data come through. And even when that happens, there's a backlog. For example, for NFP right now, there's a research that they do. There's research and collation of data that they do before they release the data itself, release the main data, right? Now, all of that collation of data has ceased. So even if the government comes back right now, there might not be a quick restart of the whole process of government at the moment. It may still take some time. So all of that is what we are seeing from the government side in the US. Why are we talking about the US more importantly? Because the dollar is what rules the world. America is the largest economy of the world. The dollar rules the world. So whatever affects the dollar is going to affect the entire market. Okay, so that's what we are looking at, and that's what we are seeing here. But across other economies, we have other news. Today we have a couple of central bank speeches. We have the ECB president is going to be speaking today at before the European Congress. Then also we have the Bank of England Governor is going to be speaking in Scotland at an economic conference. So that's for today. Then Tuesday, we have a bank holiday in China. Then on Wednesday, we have interest rate data for New Zealand. Okay, and then we have FOMC minutes as well. And then on Thursday, you see this data too. It says unemployment claims and it says tentative. Tentative means we are not sure it's going to be out. Okay? And because why? This body that releases this unemployment data is also part of the government that has been shut down. So that's why that's for that. Unemployment claims is also another important data we watch on a weekly basis. This is a weekly data, right? So we'll watch that. Then on Friday, we are meant to have the NFP non-farm payroll numbers that did not come out last week. We're expecting it this week. But watch this, it's also tentative. We are not sure, right? Because the government is still shut down. If the government restarts from now, between now and Friday, if the government comes back, we should get that data coming, right? But if the government doesn't restart, come back into operations, we will still not have that data. And that's the way it will continue. It may continue like that for the next 1 month. Hopefully it doesn't. But if that happens, then there's nothing you and I as traders can do other than go into the market and trade down technicals, or some other news event that doesn't have to do with dollar for the moment. Okay. So that's what we're expecting to see right now. So not much in the way of the news right now to drive the market. So that's basically the way it is as of now. Okay. Hope we're following this. So mostly we're going to be looking at fundamentals. We already have some things in mind. We know exactly a couple of things. And one of those things we know is that the dollar has been very weak. The US dollar has been weak. Okay. The US dollar has been weak. Weak means that for a long time, the US dollar has been a huge, massive sell. Okay. When you look at this, you will see the dollar has been selling very massively. It's been a serious downtrend since February when Trump took over. Okay. Now, of course, recently we've been seeing it in some sort of a range. We've seen in some sort of a range. So here is what we are looking at now. We are looking at the dollar getting to this area. It's buying a little bit now. We expect it to push up to this zone here. We expect it to push up to this level here. So you see there's a whole lot of confluence here. We have a trend line passed through that point. We also have a support, a resistance level there. Okay, and it's also what we call a 61.8 Fibonacci level. So you have a lot of confirmations here. So we're expecting that price is going to pull back from here. Now, usually when we see a major strong area like this, what we are expecting is that price will reverse from there. But in the case of a news, then price is likely, we're not sure what price will do for sure. But at this time now, we don't really have news coming out. So as the market is pushing towards this area, we'll be expecting to see a sell. That's around the $98.4 level, $98.4 level right there. So we should expecting that price is going to be selling from that level. Okay. Of course, we already know that market continues to be in a downtrend. So if the market is in a downtrend and we have all these confluence here, confirmations here, we should expect price to continue to sell. Okay. But in the meantime, we will expect price to do this, push up to this level, here, and then we should see a sell all the way from there, all the way to from here, there, at least all the way to this level here, right? To this support zone here. We should see price move up here, then come down to this support level right here. Okay, so that's what we should be seeing. So let's go to a lower time frame and see what we have here. On the 4-hour chart, we still see that price is still pushing. Now, this is a resistance zone here. For me, I won't be paying attention to this because I expect it to break out. It's just a little way away from where we expect price to hit before it starts to sell. So I will not be entering a sell at this current level now. Okay? Because of course besides the fact that we have a swing high there is nothing else that confirms to me that price is going to sell from here. At this moment, there is no reason why I should be making a sell at this level. Okay, so what I will expect to do is wait for price to break this level here, break this level, go up all the way to the 98.4 level. 98.4 level, that should be where you should see a sell. And of course, remember, whenever you are expecting a sell trade, you should see a sell confirmation. Okay, you should see a confirmation for a sell. It may be a candle pattern like a bearish engulfing, like a shooting star and all that. You should see some sort of a candle pattern confirming to you. We already have lots of confirmations here right now. We have confirmations. We can see the dollar index in a downtrend. We can see that this is a 61.8 Fibonacci level. We can see that this is a huge support level here on the daily resistance level there on the daily chart. We can see all that. But then the last confirmation I would expect here is for us to see a candle, a price action confirmation. Okay, so when price shoots to this level and we see a price action confirmation, that should be the signal for us to get into a sell rather than just jumping in once price gets there, right? Of course, you can jump in when price gets here. But then the thing is that when you have a price action confirmation already, that will help you to know where to place your stop loss. Where should my stop loss be? If price just jumps into this area now and I make a sell because I expect it to sell, that's fine. But where will my stop loss be? Because we know that price can play around a little before it starts to go in your direction, right? So that way, we'll wait for price to hit this level. Once it hits this level, then we'll wait for a price action confirmation. It could be on a 1 hour chart, or it could be on a 4 hour chart. It really doesn't matter. It could be 1 hour or 4 hour chart. Once we get that, we can get on the sell trade there, right? So that's what we're expecting. Dollar index is expected to sell. So let's look at Euro USD. What are we looking at on Euro USD here? So Euro USD, let's look at this daily chart we looked at earlier. Please mute yourself. Thank you. Mute yourself. So you come in, mute yourself. Thank you. Okay. So now look at this. If we are expecting the dollar index to push up and then sell, very likely we might see Euro USD get into this level before it starts to buy again seriously. Okay, we might see price gets to this support level before it starts to buy again seriously. But let's look at something. Let me see where the Fibonacci 60% will be. Okay, so you can see currently this is the 50% level. 50% level is also a significant level, right? So let's look at that. This is an area of interest. This is an area of interest right here where price is. But my concern is that I'm expecting the dollar to sell still. If I'm expecting the dollar to buy still, sorry. If I'm expecting the dollar to buy still, look at the dollar index here. If I'm expecting the dollar to buy to that level up there, I should be expecting Euro USD to also sell a bit before it buys. But with experience, you might realize that this sell may not eventually get to this level here. It may sell because the dollar is buying, but it may not get to this level. Okay, but for the signal will be whenever if you're trading Euro USD, was dollar index hits this 58.4 level that we mentioned earlier, right? That will be your signal to know that, okay, this trade has terminated, this sell has terminated and it's about to start to buy, okay? So we will be setting up right now for a buy on Euro USD. It won't be at the moment because dollar index is still likely to push up. And if that pushes up, you'll be in a drawdown, right? So the best thing will be to wait and see what the dollar index does first. Then once that is done, you can expect to see a buy on Euro USD. And that buy is likely going to be very big. That buy should be over 100 pips, okay? But we will be clear with that. We will be clear with that once the dollar index has done what we expect it to do. For this moment, we're just going to hold off and wait. Very likely, we're still going to see price come all the way down here a bit before buying. And once we're able to catch that buy, then we should see a very sizable sell. Let me. Uh, Okay, so for someone who's trying to, if you're trying to send a chat, you can send a chat right now. I have enabled the chat for everyone. Anybody can chat right now. So you can place a chat there, a question. If you have a question or you have a comment, please just drop it in the chat there. I'll be able to see it. Thank you. All right, so you can see this is a support level here on Euro USD. But from what we see on the dollar index, this is not a good place to start buying yet. Right? If you buy from here, the buy might not go very far. Yes. So for me, I will hold on. Watch the dollar, right? The dollar index has this inverse relationship with Euro USD. The dollar index has an inverse relationship with Euro USD. So because of that, I'll be careful and watch. I can see that the dollar index is still likely to buy to this zone. So for that reason, I'll be careful with getting on Euro USD yet at this moment. Okay. I hope we understand what I'm saying. All right, so gold has been on a very massive rally, like constantly breaking new highs. This morning, gold broke another all-time high of around 3,950. That's around 3,950 gold hits this morning. It continues to push up. Now, when you see gold make this kind of moves, it's very bullish. We can see that the trend is strongly bullish, right? But then it won't be advisable to jump in on this buy yet. And even a sell is going to be risky yet. Why? Because you need to see price pushing down. You need to see the momentum coming down. When the momentum comes down or starts coming down, that's when that's where you get on a sell. But currently, the momentum is still strongly up, but there is weakness. There is some sort of a weakness at the top there. Can you see this? There's some sort of a weakness at the top there. So it's not heavily pushing up and it is not coming down just yet. So in this case, what is advisable is hold on or hold on. When we start to see price give us a sell pattern, when price starts giving us a sell pattern, we know we should expect a pullback from here, right? That pullback is what you can sell into because currently, look at this. We are seeing a breakout level here. Price broke out of this level right here. Okay, so somehow it should push back into this level before buying. Price should push back into this support level, into this level before it buys. Push down here, then buy. That's what we're expecting to see now. So if price is going to push down here and buy, this push down is a sell, of course. So, but that sell, when is it going to happen? We need to see an impulse. Impulse means like a sizable candle, something like this, right? Or maybe a symbol like this, maybe a candle pattern like this, or like this, will give us a sign that, okay, price is pushing down. We can get on that sell and sell. But for me, I think the better opportunities on gold right now on the buy side. Yeah. So what we will see on gold is still going to be if it sells, that's going to be like a pushback, a pullback. But besides that, it's meant to be a very bullish move on gold right now. Gold is very strongly bullish. We're expecting that gold is going to move over to the 4,000 level not too long from now. In fact, it's more like probably around 500-600 pips move away from 4,000 right now. And we know from the way gold moves, that is very small. Okay? From here to here, gold has moved over 500, almost 600 pips this morning alone. Just from when market opened till now, gold has done almost 600 pips, right? And that's about the 600 pips we're expected to expect before it gets to 4,000. So very strongly bullish, but for us to get in now, we will need to see a pushback, a pullback before we buy, okay? So gold is something we'll keep an eye on for a buy. And we apply Fibonacci. Yes, we're applying Fibonacci. What are we applying Fibonacci to? You mean the gold? What are you talking about? Okay, if you're applying Fibonacci, if you're talking about applying Fibonacci to this gold move, this is a 4-hour chart. I would not apply Fibonacci yet. For me, what I'm just identifying right now is I can see that it broke out from this level. I can see that it broke out from this level. Okay. I can see it broke out from this level. That's all I can see for now. Okay. I can't apply the Fibonacci because I have a swing low. This is a swing low. I have a swing low here, but I do not have a swing high yet. Price is still pushing. I don't have a swing high yet. For me to have a swing high, I need to see a candle push down. When I see a candle push close below the previous candle, when I see a candle close below the previous candle, that will give me a swing high. See? So this candle close here. Look at this now. This candle close here. And then another candle open, which is the current candle. This current candle. Price came down. And then currently it is above. It is above the previous candle. Okay? Now, I cannot have a swing high like that. So for me to have a swing high, I should see a current candle close below the previous candle, close below the close of the previous candle. So if this candle price moves down now and then closes like this, which is below the previous low, this is the close. Close below the previous close, sorry. This is the close of the previous candle, this area here. Okay. Now, if this current candle now closes below this close, that will give me a swing high. Then I can then apply the Fibonacci from here to this top to get the swing, to get how far it's going to push down before it buys. I hope that's clear. So we can't just use the Fibonacci now yet because we don't have a swing high as of this moment. Okay? So we should wait for price to, even right now, we can see this is a 4-hour chart. We can see that price is this current candle is about to close in 3 minutes. Still, it doesn't give us a swing high. So we have to still wait for price to push down again, because that's how you know that price is about to change, that it's about to push down. It's about to come down. If you don't see that, then price keeps pushing. It keeps pushing because in the next candle, this candle can close. Now the next candle will just shoot up. So if you get on the sell on that, you are going to be in a serious drawdown. And when you are in a drawdown on gold, especially from where it is right now, it's going to be very brutal. Okay. So not good enough to use a Fibonacci yet. Okay. So we have opportunities coming through with these instruments, just that they are not at this moment set up. Okay. Now look at USD/JPY. USD/JPY had a major gap. This is what we call a gap. You can see the market closed here on Friday. And what happened? The market opened at this top. This is a huge gap, and this is something related to probably something that happened over the weekend, right? Now, this gap is something that's when price starts to come down, price is likely going to come and fill this gap. This gap you're seeing here will likely be filled. And the way to be filled is by price pushing down like this and then filling it. Once it fills it, then it will start to buy again. Okay. So that's the way it works. This price is going to come down, fill this gap up, then it will start to buy again. All right. Because that gap, it's more like a principle in the market. This gap has to be filled before price moves up again. Okay. But then you need to see momentum of this price pushing down. If momentum is not coming down yet, like we are seeing now, there's no momentum down. So you can't jump on the sell now. That's obviously when price starts coming down, you know that there's going to be a sell opportunity here because we expect this gap to be closed. And when the only way this gap can be closed is when price sells. Okay. So if that's the only way we expect this gap to be closed, that means there will be a sell opportunity on USD/JPY. But you need to see, like we said before, you need to see a sell pattern. You need to see a price action that's telling you to sell. Price action means candle formation, a bearish candle formation. You need to see bearish candle formation for you to jump on the sell. We had a bearish candle formation here, and it was followed by a massive sell. We need a bearish candle formation here for us to expect this sell to happen. Okay. So lots of opportunities in the markets are setting up, but currently not ready. Even this instrument as well, CAD/JPY, the same thing. We're expecting the same thing from CAD/JPY. CAD/JPY and Euro, CAD/JPY and USD/JPY, we're expecting the same move in both of them. So yeah, that's what we're expecting here. So guys, I always say, we have analysis we do on our Telegram group. So please be on the Telegram groups and keep your eye on trades that we give on the Telegram group. We will give you all further updates on all these trades when market begins to take shape. We'll give out the trades on the Telegram group. So please join the Telegram group and then follow up on the trades, and then we'll be able to give you further updates there. And also our classes and trainings we're holding. Links will be dropped in the Telegram group as well, in the relevant Telegram channels, and then we'll be able to, serve you from there. Okay. Now, all this analysis we've done, my disclaimer here is that this is us just studying and analyzing the market. There's no guarantee of anything. So make sure whenever you are entering any trade, you enter with not more than 2 to 3% of your capital. Okay. This is not, oh, this analysis must be perfect, so let me enter with all my money. There's a possibility of losing money. So always make sure you are risking a part of your capital, a small part of your capital that you can afford to lose. And if that trade doesn't go your way, if you lose that, you can always come back in the market and recover it because you still have capital. Okay. So make sure you're not risking all your money on one trade. Make sure you're risking between 2 to 3% of your capital on every single trade. That way you always stay ahead in the market. Right? Thank you guys. I see you guys on the next one.